तो आज हम जिन कंपनीज के बारे में बात करने वाले हैं यार, वो वर्ल्ड का 50% पैसा ओन करती है। ये कंपनीज आपको हर सेक्टर में मिल जाएगी। टेक इंडस्ट्री, फूड, एग्रीकल्चर, ऑटोमोबाइल, एनर्जी, पेट्रोलियम, फार्मास्यूटिकल, हेल्थ, मीडिया एंड नेटवर्किंग, फाइनेंशियल इंस्टीट्यूशंस, डिफेंस, रियल एस्टेट, फैशन, कॉस्मेटिक्स, कमोडिटीज, बैंकिंग, एक्सेट्रा. Any major industry you can think of, these companies are the major stakeholders in the top company of that industry. ये companies S&P 500 की 89% companies में major stakeholder है. So the companies I am talking about are none other than BlackRock, Vanguard and Street.
BlackRock is the world's largest fund manager.
BlackRock's chairman and CEO, Larry Fink.
88% of the companies on S&P 500, 88% of them, the largest shareholder of those companies.
Largest mutual fund company in the world, the Vanguard.
Like a free Wall Street firm, BlackRock, State Street, and Vanguard control $22 trillion in assets.
मार्केट वॉच एक रिपोर्ट के हिसाब से वर्ल्ड में $40 ट्रिलियन ऑफ मनी सर्कुलेशन में है, एंड आउट ऑफ विच 21 ट्रिलियन आर इन एसेट अंडर मैनेजमेंट बाय BlackRock, Vanguard and Street. BlackRock having asset under management of 9.42 trillion, Vanguard having 7.7 trillion and Street having $3.7 trillion of asset under management, which sum up to be $20.82 trillion in total. If we compare these numbers with the GDP of India, Street alone has asset under management equivalent to India's GDP. So the question is, how these companies became so big and what they actually do. And if they are so big, why don't we generally hear about them? And as aspiring entrepreneurs and businessmen, what you can learn from the business strategies of these companies. And in the end, we will also discuss some shady facts and controversies these companies are linked with generally. So what these companies actually do. BlackRock is a global investment management company, currently the largest and the biggest influential financial institution in the world. Its primary business is to provide investment management, risk management, and advisory service to the clients and financial institutions. So BlackRock runs through following channels: mutual funds, hedge funds, ETFs, closed-end funds, separately managed accounts, selling softwares, and helping government institutions. Over the decade, it has substantial presence in passive and active investment strategies. It is present in every domain of investing you can think of. So the story of these companies starts when people started looking for something called diverse portfolio or balanced portfolio, which can minimize the risk and maximize the investment returns. We also need to understand the major events in American stock market and changes in investors' behavior which led to rise of these companies. So the story dates back to 1920s America, and stock market was on a boom. And everyone was doubling their money day by day. People were investing like crazy, not even analyzing the stock market, just putting in the money. And this created a bubble finally burst in 1929. A major impact was also from World War I, the affected agriculture.
Through Wall Street, when he warned that sooner or later, a crash is coming. And it may be terrific.
In 1929, October 1929, the stock market crashed and led to the greatest recession in the history known as the Great Depression.
The crash as the beginning of the Great Depression.
It lasted for a decade from 1929 to 1939. But just few months before the market crashed, the man was born named Jake Bogle. He was born in a rich family, but his father lost all his inherited money in the market crash of 1929. Soon he completed his degree in economics from Princeton University. While writing his thesis, he is struck to something called mutual fund industry. What is a mutual fund company? Let me tell you. Mutual fund company is basically comprised of two companies. One is a fund company and second is a management company. The main objective of fund company is the agreement between the client and the company. And second is a management company which manages the fund by buying in stocks, bonds and assets. It's basically invest the client's money. As per US law, you cannot run a fund company. It requires a management company to manage its assets. See, the recession had a great impact on the customer behaviors and investors behaviors. So people used to keep their money only in banks, and not even in banks. They used to keep cash at home. And investors were looking for a safe investment opportunity, which was fulfilled by the mutual fund industry. During 1951, mutual fund companies used to have a diverse portfolio, a balanced portfolio, which used to have 60% of bond and 40% of stock. It was created by Walter Morgan, the CEO of Willington Fund. Willington Fund was the leading company in the mutual fund industry at that time. Jake Bogle joined the company as the executive assistant in 1951. Later, in 1976, Jake Bogle became the president and CEO of Willington's fund company. In order to gain control over the company, he named it Vanguard. And from here, the story of Vanguard Group started. See, the decade of 1950s was like the rise of mutual fund industries. The decade of 1960 was like the decline of mutual fund industries, because investors were like, we will invest in equity and gain more profits. And the decade of 1970s was the decade of economic turbulence. Stock market was on a decline. In 1976, when Jake Bogle started Vanguard Group, he had two major challenges. The stock market was declining and it was very difficult to beat the market. The only way possible was to invest in every stock possible, every company possible, while keeping the price of the shares low. And the second problem in front of him was he was the president of the fund company and required an asset management company in order to invest. But you know what? He came up with a simple yet legendary idea which turned mutual fund industry upside down. He came up with something called index fund,
suggesting that we create this new investment management company owned by the fund shareholders. This makes us the first mutual fund.
See, the index fund is a type of mutual fund, you can say. It has defined portfolio and it's decided in which stock how much money will go. It is very diverse and has a broad market exposure, because of which there is very less need of speculation, which finally results in very less operating costs. Every financial market has an index fund. You have heard of many famous index funds like Nifty 50 and Nasdaq 100, S&P 500, etc. And there is very special thing about index fund is that they can be traded at the end of the day at a fixed price. So currently the Vanguard's inflow of investments is 8.5 times bigger than its competitors combined. Over the years, the operating cost of Vanguard has fallen from 0.7% to 0.12%, which is a massive drop. Because of such low operating costs, Vanguard has been a market leader in the mutual fund industry since 1.5 decades. In initial years, Vanguard had asset under management of $17 billion, which grew to $8.1 trillion, all-time high asset under management in 2022. So it was about Vanguard. As you can see, Vanguard is basically a mutual fund company and don't have much influence on the companies it owns. But the company we are going to talk about now has influence over the companies it owns. It is the world's largest asset manager, BlackRock. And the story starts with the person named Larry Fink, the CEO and the founder of BlackRock. See, Larry Fink was born on 2nd of November 1952 in a Jewish family in California, America. His mother was an English professor and his father owned a shoe store. In 1974, he earned a BA in Political Sciences from University of California, and later in 1976, he earned an MBA in Real Estate from the same University of California. As you can see, he had a really diverse education, which later helped him in many different areas in business. In 1976, he started his career in First Boston as an investment banker. See, in 1960s, bonds really started to get traded in the market, and he was one of the first pioneers in the mortgage-backed securities. So what are mortgage-backed securities? Let us try to understand it with a simple story. Suppose Raj wants to buy a house. So he reached to Mr. Adarsh, who runs a bank. In order to give loan to Mr. Raj, Mr. Adarsh will analyze the financial situation of Raj and then come to the conclusion whether to give loan or not to Raj. And there is a high risk involved for the bank also. But by the new system of mortgage-backed securities, Mr. Adarsh is tension-free. Why? Because this time he sells this mortgage to an IMC, and these IMCs create a bundle of mortgages and name it mortgage-backed securities, which are then sold to investors like pension funds and big institutions. In this way, this results in socialization of risk through financial packaging. These mortgage-backed securities laid the foundations of 2008 crisis. See, by some estimates, Larry Fink made $1 billion of profits for First Boston Group through mortgage-backed securities. He was successful until 1986. He made a loss of $100 million because of a wrong prediction of interest rates. तो जैसा कि यार लोग आपका अच्छा काम याद नहीं रखते हुए तुम्हारे बुरे कामों को याद रखते हैं, वैसे यार उन्हीं कारणों से लैरी फिंक को भी जॉब छोड़नी पड़ी. Then after taking 1.5 years of drop, you can say, or a break, he finally decided he wanted to start his own company. But no one was ready to invest in his business because of his bad reputation in the market. Until he met the CEO and founder of Blackstone Group, Steve Schwarzman. He was ready to invest $5 million in his company and he was good to go. In this way, Larry Fink and his co-founders started a company named Blackstone Financial Management Company. See, there is a very interesting fact about Steve Schwarzman. He was a very big stakeholder in Lehman Brothers Group and was about to become the CEO, but due to some reasons, he left the company. So this time Blackstone invested $5 million in the Larry Fink's business. named Blackstone Financial Management Company. But as we all know, the financial institutions are found in groups. One is a fund company and one is a asset management company. This was the investment for the asset management company, and the fund was still yet to be created. But you know what? Blackstone had a really good brand value at that time, which made it easy for investors to trust on the company. And Larry Fink was nothing less than a genius in financial packaging and financial engineering. In just 5 years, Blackstone Financial Management had $8 billion in asset under management. At this point, due to some difference in the vision of the leaders, you can see Larry Fink and Steve Schwarzman. Steve Schwarzman made his exit with $240 million. As he invested $5 million and got $240 million, it's not that bad. But it's still considered the worst decision of his life. See, BlackRock is way bigger than Blackstone right now. See, 3 years after separation, BlackRock had an asset under management of $46 billion. In year 1999, BlackRock went public, and with the value of each share at $14. At the end of the year 1999, it has $146 billion of assets under management. After getting public, BlackRock had an inflow of money which they heavily invested on the development of speculation technologies. After 1999, BlackRock grew both organically and by major acquisitions. See, 1999 to 2000 was the era of dot-com bubble. From 2000s to 2004, the US economy was on a verge of downfall, you can say. If you know 2008 crisis, you know it happened because of mortgage-backed securities. To recover from the dot-com bubble crisis, the Federal Bank lowered the interest rates to pump the economy. Seeing the interest rates going so down, people started investing in real estate on mortgages, and banks were giving out loans so easily because they sold these mortgages to investment banking companies, and then these companies sold these mortgages to investors in form of mortgage-backed securities. And when people started defaulting in large numbers, this bubble also burst and led to the crisis of 2008.
It was the worst day on Wall Street since the crash of 1987.
Stock market is now down 21%.
We're now down 43%.
And this crisis was the turning point for BlackRock. At this point, the US economy hired BlackRock to clean up the mess of 2008 as of their high experience in mortgage-backed securities and their speculation technologies named Aladdin. In 2008 crisis, it is said that BlackRock helped the companies which it has invested in, and also made some other companies get acquired by BlackRock. In 2004, BlackRock acquired State and Street Research and Management Company for $325 million. After the crisis throughout the decade from 2009 to 2020, BlackRock made some major mergers and acquisitions that grew the company. The one of the major acquisition made by BlackRock after 2008 crisis was the Barclays iShares ETF business. It is currently the foundations of BlackRock on which it runs today. So what is ETF? ETF stands for Exchange Traded Funds. They are very similar to mutual funds in many ways. ETF own financial assets such as bonds, stocks, currencies, mortgage, future contracts, commodities, etc., which provide diversification than owning a single stock, and they can be traded throughout the day unlike mutual funds, because of which they can be very volatile in nature. In USA, there is $6.8 trillion invested in ETFs, following Europe with $1.4 trillion and then Asia at $1 trillion invested in ETFs only. Out of the $6.8 trillion of ETF market in USA, BlackRock has a stake of 34%, Vanguard having 29% and State Street having 14% out of the total market. BlackRock currently manages $10 trillion approximately, which makes it world's largest asset manager. Currently, BlackRock has 70 offices across 30 countries and clients from 100 countries. It has developed Aladdin, which is world's most advanced risk management software. This software is not only used by BlackRock but also by Vanguard, State Street, government institutions, pension funds, etc. Even the major companies like Google, Microsoft, Apple, etc. also use this software to manage their portfolios. Even RBI का भी एक्सिस पैसा यही कंपनी मैनेज करती है. BlackRock itself has a diverse portfolio, having stake of 5.09% in Apple, 4.86% in Microsoft, 2.25% in Nvidia, 2.25% in Amazon, 1.5% in Alphabet, which is Google's parent company, and the list goes on. So the question is, if they are so big, why haven't you heard about them till now? BlackRock does not control all the media, but it has major stake in major media companies. According to the report of Public Accuracy, BlackRock and Vanguard are the major stakeholders in the top 6 media companies, which covers the 90% of US media landscape. Together, BlackRock and Vanguard own 18% of Fox, 16% of CBS, 13% of Comcast, 12% of Disney, and 12% ऑफ न्यूज कॉप्स। इन्होंने इस हद तक डाइवर्सिफिकेशन कर रखा है कि ये हर बिजनेस के कंपेटिटर्स में भी इन्वेस्ट कर देते हैं, विच मेक्स अस थिंक क्या वो कंपनीज असल में कंपेटिटर्स हैं। दे आर द मेजर स्टेक होल्डर्स इन एवरी बिग कंपनी ऑफ अ मेजर इंडस्ट्री। फॉर एग्जाम्पल, लेट अस ट्राई टू अंडरस्टैंड BlackRock's top 25 holdings, in which BlackRock has some major holdings in some fundamentally important industries. Like in information technology industry, it has shares in Apple, Microsoft, Nvidia, Broadcom. In healthcare, like Johnson & Johnson, United Health Group, Lilly. In some famous companies like Amazon, Tesla, Google, Meta, Visa. In finance sectors like Berkshire Hathaway, JP Morgan, MasterCard, Visa. In consumer supplies like P&G, Coca-Cola, Pepsi. In energy sector, ETFs, etc. Seeing such big influence, many people connect these companies with Illuminati. In today's scenario, suppose the real estate you are living in, the furniture you are using, the mobile phone you are using, the things you are eating, the funds you are investing in, the vehicles you use, most of the things have some sort of connection with these companies. They make money in every scenario. This is the power of diversification. Nowadays, the decisions and thoughts in the people are also influenced by the corporate world. Like for example, invest $100 a week in stock market for 20 years and you will retire a millionaire. The holy cow advice of Wall Street. See, there are many controversies these companies are linked with. Generally, it is said that BlackRock had invested in the companies that were responsible for the 2008 crisis, and BlackRock himself helped the US government to come out of crisis. During the time of COVID-19 pandemic, BlackRock was responsible for the stabilization of stock markets on the call from the government. These companies are so powerful that they are allowed to invest in the blacklisted companies in China. After all the sanctions on Russia after the Russia-Ukraine war, the one company was unaffected, which was BlackRock. The most controversial thing among these companies, BlackRock, Vanguard and State Street, is that they follow circular ownership. Means these companies are the major stakeholders in each other's business, which makes them technically a single big organization. So what are the business lessons we can learn from these companies? See, there is always a scope of innovation, whether it is introducing first index fund or starting to develop Aladdin, selling mortgage-backed securities or ETFs. Second, we learned that when your industry is suffering, it is the best time to acquire small businesses which can open new gates for your business. Third and finally, networking. Like in Larry Fink's case, why do you think Federal Bank called BlackRock during the crisis of 2008, and how Larry Fink convinced Steve Schwarzman to invest in his company? See, BlackRock, Vanguard and State Street are dangerously big companies, and everything has a good side and a bad side, but the overall picture is grey most of the time. For rich people, it is really a problem-solving companies because it has the greatest expertise in portfolio management. At that level, what is the meaning of wealth? They are printing money out of thin air. Basically, the company's focus is on the influence on the masses, and it's successful in doing so without grabbing the attention of the masses. But out of everything, what I like best about these companies is that it's leverage over everything. Whether it is people, markets, capital, competitors, technology, or even media. And yeah, their diversification in investments. They have really invested on the development of human civilization. So this was all for today, guys. See you in the next one. And if you want to learn about taxes, the next video is going to be about that. It will appear on the left or right, maybe. Check it out.